What are the tax benefits or deductions I should be aware of when buying a home? Well, generally speaking, there are no tax deductions when buying a home as a W-2 employee. There's very little tax deductions actually for W-2 employees, which is why I teach people to go create a business to make money. But then that's why we have the tax course, is we teach you the difference between a W-2 employee and a business owner and how you can reduce your taxes. There's really nothing you can do with personal. Yes, you can write off the interest rates. Now that we have 6 and 7% interest rates, maybe people will start writing off the interest. When it was bound in 3%, it wasn't worth it. But you can only write off the interest if it's less than $750,000. So I guess technically, because interest rates now are 3 times what they were 3 years ago, and sometimes double, but I know people, I have clients that got interest rates in the 2%. So when I say 3 times, it's not an exaggeration. If you got a loan at 2% fixed and now it's 6.5%, that is 3 times greater. So I guess if you had a $500,000 home at 7% interest, you could write off the interest. And then if you wrote off the interest, you could write off the taxes. That's about it. Now, if you're a business owner, well, there's a whole bunch of stuff that you can write off. You can write off the insurance. You can write off the electricity. You can write off the toilet paper. You can write off the landscaper. You can write off the house cleaner. I mean, it just goes on and on and on and on. If you're a business owner, but not as a W-2 employee. So I know there's another part to that question. I know it was tax benefits. And then what was the other part of it? Yeah. So tax benefits or deductions. So that's it. As a W-2 person, unless it's less than $750,000, and probably at least 5% interest, there's not a lot you can do. Now, you can write it off. So I want to clarify this. Trump, when he changed the tax code, he made it to where you can't write off the house, the interest, because he's given you a larger standard deduction. So what he was trying to do is make your tax return fit on a little postcard. So it's just how much money came in, how much did you pay in taxes, standard deduction, kids, this is how much you owe. So it's just to simplify things. And what they did is they figured out what the average person in America paid, which Californians and New Yorkers did not like this because their homes were all over $750,000. And if your home's over $750,000, you can't write off the interest anyway, even if you are a business owner, unless you run it through the business, which is a completely different topic. So for the most part, you just do your standard deduction, which makes it, you get the same deduction if you're a renter or a homeowner. So hopefully that everybody's situation is different. But I would talk to your tax professional. I would look at it and just see, do the math and figure out what's going to be best for you.